Good morning out there in the trading universe. It's Tuesday. It's 11 a.m. It's Tuesday that feels like a Monday, and we're ready to rock and roll here. We've got Greg Gunther live. Gunner, good morning, my friend.
What is up?
I'm sure you're seeing all sorts of candles one way or the other on your screen. So we've got a lot to dig into today. We've got some interesting stuff. I know you and I in the office this morning, we've been talking semiconductors. Seems like there's a rollover happening. A little bit of a breakdown, and we'll see what happens there. So we want to cover that. We want to talk, I guess, big picture stuff as well. Just sort of like what's the S&P look like? What are some of the Mag sevens looking like? Is there anything that's unfolding here that could be a trend? And then a bunch of other things. We want to get into just we'll look at some charts and we'll see what you're interested in and what we think we could put some place some bets on in this market because we're seeing all sorts of opportunity. The markets are moving, and the sectors are all acting slightly different. So why don't you take us through the morning and greetings to everybody. We're here. We're live. We're live on the YouTube Paradigm Profits channel. We're live here on Zoom. Go ahead, write in, say hello. We've got everything open and ready for action. So if you've got any questions for Gunner, you can throw them in the Q&A or the chat. And if you just want to comment on something, go ahead and do that as well. So Gunnar, I'll let you take it from here. What are you seeing on the screen? Get everyone caught up to speed. And what do you like?
Well, let me share real quick. Well, first of all, and Matt, you and I were kind of talking about this a little bit earlier, but this is the S&P 500 right here. Now, looking at this, it doesn't seem like there's much wrong with the market right now. Everything's copacetic. We're just sort of melting higher like we have been. Yes, stocks were down on Friday and we're down a little bit today, but for the most part, it still feels like we're in this rally. However, below the surface, there's a lot going on and there's a lot of stocks moving lower here. We've talked a lot so far in 2024 about how leadership was looking pretty narrow and how some of the Mag 7s and especially the semiconductors, your NVIDIAs and others were getting a little bit out of control on the long side. They have produced some pretty amazing moves, but late last week and into today, after the 3-day weekend, everybody had some extra time to sit around and think about like, oh, things weren't looking so great Friday in those stocks. We're seeing some additional selling this morning to kick off the short trading week. And so it's starting to feel like we're going to get a little bit of that unwind, especially in some of the stuff that has really outperformed so far this year. I've been scanning around looking to see what stocks are hitting new highs today and things of that nature, because those are in the minority as of right now. But you can see here from the heat map, and this is the 1-day heat map, what things are looking like today. Lots of red in the semiconductors, minus Intel and Texas Instruments, which are pretty stable, but some of the frothier ones, your NVIDIAs, your AMDs, down about 5%. Seeing a lot of red in software, in your equipment stuff down here. Tesla continues to leak lower right here after coming back a little bit last week. That chart's looked vulnerable for a while now. So what we're seeing is, if you want to do big picture stuff, we're seeing your Mag 7s, your big stocks, they're kind of getting picked off one by one and starting to roll over. I mentioned Tesla, and let's look at the Tesla chart real quick while we have it front and center in our brains right here. I've drawn some lines on this chart right here. We can kind of ignore those. I think the important stuff right here is the big whoosh lower from earnings late last month, and then this attempt here to try to creep up and fill this gap, and now we're kind of rolling over again. Yeah, it had a couple good days last week. On Thursday, it was up 6%, and now it's giving a lot of that back right here. I still think this looks kind of bear flaggy to me in the longer term. I think that if market conditions continue to be squishy here, Tesla's going to have a hard time getting off the mat and holding above 200. I really think that if we want to feel bullish about this name again, it's going to have to get back over 210. This level here and close this window, close this gap right here from earnings, that big gap lower. And I think that that's what it's going to take for people to really get bulled up on this name again. But again, this is one of the Mag 7s. We're down to Mag 6, with Tesla rolling over here. Its performance, if we go down here, you can see here, down more than 8% over the past month. down 20% over the past 3 months, down 23% year to date. Doesn't feel super bullish right here. And I feel like there's a lot of negative news that's also accompanying these moves. Sometimes that helps, sometimes that hurts. But in this case, I think that's kind of confirming the fact that there aren't as many Tesla bulls out there as there were back in early 2023 when we had this big push higher into the summer. So again, well below those July 2023 highs right there, which were closer to $300. We're below 200 right there. Don't see any reason to try to get long this stock right now. Let's look at some even more important names. Apple Computer, you might have heard of this company right here. We were talking about this stock reaching and attempting to break out back in the middle of December, and that move failed and moved all the way down here to the bottom of its range. It tried to go back and attack those highs. It failed again, this time a little bit lower, and then it failed again even lower there at 190. And we can see here, Apple's been sluggish as heck, man. I mean, 1, 2, 3, 4, 5. So this is the 6th red candle in a row if this holds today, and it's creeping down here toward 180. 180 feels like an important level to me. That was the swing highs back here in mid-October. It's where it reversed and moved higher after that big whoosh lower during the first trading day of January. It's where it reversed higher right here too, which was a pretty nice looking reversal candle back on February 2nd following those earnings. And now it's just teetering on this 180 level right here. I feel like this has a trip down here toward its October lows in its future if it can't hold this level right here. So again, what are we down to? Mag 5 now? If we're just taking these out one by one and seeing what the performance is starting to look like from some of these market leaders right here. What about some of the even stronger ones? MSFT, if I could spell. Much better looking chart, obviously. Much closer to its highs. But you can see here, look at these candles. Up here from last Monday, right here, we had a nice push to new highs and the 420 area, and then basically an opposite move the next day. We had an opening on its lows and closing its highs, nice big powerful breakout looking candle on Friday, and then last Monday opened right there at its highs, moved lower all day and closed right there where it opened on Friday, and then gapped lower on Tuesday. That's not a good look as far as I'm concerned in the short term. And again, this is all sort of building up to how we should be approaching the market here moving forward. This tells me that we are kind of stumbling into a little bit of seasonal weakness, and we can keep going too. So what is this? How many mag stocks are we at now, Matt? It's 5, 4. We have 4 left.
No, yeah, we're not down to 0 yet, but
not down to 0 yet. There's Google, which doesn't look too bad. It's actually up today, which is nice. But again, Google had that ugly earnings reaction, down more than 7% on the last day of January right there. Attempted to bounce from those levels, failed trying to close that gap, and now is moving lower. It feels like, if we want to draw a line here, it feels like, this is kind of the area right here. And this isn't perfect, obviously. But it feels like this in the low 140s is kind of the spot right here. If it can't hold this, then I think we're going down here into the 130s, in the short term. So again, even some of the strongest names in the market, they're starting to stumble a little bit. This tells me that the stuff that we've been thinking about, and we've been talking a lot about this over the past few weeks, and I know it can feel a little bit frustrating when we talk about things like we're entering a period of seasonal weakness here, and then you still have the semiconductors and everything just blasting higher, and it feels like you're on the wrong side of the boat. It feels like the market is starting to turn a little bit in the bear's favor right here, and with it being an election year, the seasonality says that, this is the time for the market to flatten out or correct a little bit. The same thing goes for, just your general, your yearly roadmap. We've exited the best 6 months of the year, the strongest 6 months of the year. Now we're in February. Now we're back in the grind right here. So I am starting to think more on the short side, stuff we can play for downside moves. Yes, there's still going to be stocks that are looking strong, that are bucking the trend. However, I think that list is going to continue to shrink and shrink and shrink. In the chat earlier today, over the trading desk, we were talking about how a lot of the stocks that were really starting to gap and run last week, those were getting pounded today. I think some people are starting to get a little bit skittish, and a lot of the stocks that have performed really well, they're starting to see a lot of selling. And so if that spreads, and if we continue to see some downside action, in the NASDAQ, in the S&P right here. I think we're heading toward another routine pullback here. And again, this is where the psychology stuff is important. It's going to be a routine pullback, probably between 5 and 10% from the highs. It's not going to feel like that. It's going to feel like the sky is falling. And that's how people are going to feel because our recency bias, the market has moved straight up essentially since early November. And that's what everybody's locked into right now. Back in late October, nobody could sell fast enough. Everybody was convinced that we were headed for a bigger drop. The market was going to, plummet, and we were in big trouble heading into the fall. That wasn't the case. Right at the beginning of, at the end of October, beginning of November, stocks caught higher and have blasted off. There was a little bit of disbelief on that move, but then I think toward mid-December, people started buying into it. We're starting to see a lot more speculative traders leak back into this market. I've written about this a lot in the Morning Reckoning, how the speculators are back, the message board traders are back. People are making crazy bets, crazy, reaching for like light years out of the money calls on some of these big moves right here. And eventually the music's going to stop. And I feel like we're getting to the point where the music's starting to, we're going to hear that record scratch and everybody's going to be scrambling to sell, to get out of the way. And that's going to lead to some downside action and hopefully, some nice downside trades if we can catch some of that.
Yeah. And like we've been talking about for weeks now, if you're just out there and you're holding the S&P 500 in an ETF, you're just feeling good. There was nothing bad, but underneath the surface, there's been a bunch of these different, tough moves, a lot of chop. And so, Gunnar, you're saying if we see, 5 or 10% move, you're talking, it looks like there's two little ledges there maybe for the S&P. You got one at 47.50, and then you got the other one that might be 45.50. And you're saying that would actually just be normal.
Oh, yeah, totally normal. The market always is going to have these pullbacks, 2, 3, 4 a year. That's the price of admission, right? That's the price you pay. The volatility is the price you pay for playing this game. And in the moment, it always feels worse than it is. So our job is to, keep our eyes peeled, recognize what type of market environment we could be coming into, and then not letting our emotions take over when we're trying to play these. We can play the downside without there being a crash. It's a little trickier, it's a little quicker, but it can be done. And again, there can be stocks that ignore some of this and continue to push higher. The list will be short, but there could be some upside plays along here too. But again, I do feel like this is just some seasonal weakness that we're coming into. A little reset for this market is not a bad thing. When we see stocks like NVIDIA out there, I think we can all agree that a little bit of a reset on here is not going to hurt anybody's feelings. Maybe except for people that were buying like way out of the money calls up here, in the $700 range. Maybe they'll hurt their feelings a little bit, but those will go to zero quickly. They'll be able to recalibrate and move on, hopefully. But we're something like this is not that big of a drop right here. It's going to be a little while before this thing catches. And again, this has nothing to do with being bearish NVIDIA longer term. I'm sure the company is going to do fine. We have all this AI stuff that's brewing right here, but things just got a little too hot for the time being. So let's see where this thing retraces. Are we going to see it come down to, this little area right here, 620-ish? Maybe that would, maybe I could straighten that out a little bit. Maybe that would help blow off some of the steam right here. But again, I think the big event this week, that pink dotted line right there, the vertical line, that's earnings coming up. NVIDIA announces after the bell tomorrow. It's not Monday. It's a Monday, Tuesday. So Wednesday afternoon, NVIDIA announces earnings. Are they going to be able to impress anybody? What numbers are they going to have to pull out of a hat to get people excited about buying the stock here after this huge breakout and run up?
Fireworks. We got some fireworks for this week. If you like trading and you like action, this week is setting up very interesting with what we're seeing in the semiconductors. So Gunnar, I'll ask you another question. This one's kind of like off script. This is a top trades question, not a trading desk. Because trading desk, that's your paid publication. You're very regimented. You're picking, it's like sniper shots. This is more for top trades. If you had to deploy some money this week, and you were like, hey, I want to get into a spec account. I want to get speculative here and deploy some money. Are there any tickers you're looking at in particular, like upside or downside? Anything you want to talk about?
I mean, if you want to go really, really speculative, you know, I don't think it would be that crazy to put on a downside bet on maybe not Nvidia if you just wanted to avoid like some of the bigger earnings. No, I mean, I say, oh, these are tough. You know, I don't like to play earnings. Um, Maybe a downside bet.
But that's you in the trading desk. This is top trades.
You just
There's no rule. There
you
are no
want me to
rules here.
you want me to sit at the roulette table with you right here. So yeah,
Yeah.
I would say a Nvidia downside bet into earnings wouldn't be the worst idea in the world. Um, you know, something. I mean, and again, when I say like
And they're
spec,
priced so expensive. They're probably ungodly expensive
yeah,
always to
yeah. I
buy
mean,
anything NVIDIA.
pick something outrageous and then go with it, and then if it hits, then sell it into like the panic. You know, the Thursday morning, you could do that. But again, this would be a very small amount that I would risk because I would be, you know, I'd be like swinging for the fences on it and just assuming it would be 100% loss. You know, if you wanted something, you know, not as risky, I would say that like just some sort of downside bet, maybe a March strike on SMH wouldn't be a terrible idea right here. You know, it's holding pretty well in the mid 190s right here, but it does feel like, you know, this needs to correct. And again, this just putting this into context with everything that's sort of happening in the markets right now. You know, maybe some of the stocks that have just really gone crazy. Like this is a name right here that has been it's a recent IPO. It's been a very popular trading stock, absolutely exploded higher on earnings. And like I said, we've seen some crazy earnings reactions right here. I mean, this stock just IPO'd back in September, you know, showed us a almost 50% bounce following earnings earlier this month. And then, you know, what was that, Monday, the 12th, like up another 30%. Absolutely insane moves. Maybe bet on a little bit of downside here. It's already down 7% today. Let's see what crypto is doing. We've talked a little bit about this before, but is crypto going to get dragged down with everything else right here? It was looking pretty good over the weekend. And Mara and what's the other one that we like now? CLSK? Because
Yeah.
I always get the ticker wrong. What is it? What's Clean Spark?
CLSK. I
CLSK.
got that one. I think my portfolio is starting to get narrowed down a little bit more. I think I have AI, the ticker, I have CLSK, and I have
Yeah.
Palantir. So every week I say all these things, I make all these disclaimers. I think people feel like I have like all these different stocks everywhere. It's getting limited at this point. But yeah, I'm sitting in Clean Spark, but it's
Well, Clean Spark was looking like it was like nice high and tight flag up here after this gap. And then this and Mara and maybe a few of the others gapped higher this morning and then immediately got sold. And we're down like 3-4%. It's down 8% now. It looks like it wants to close this gap down towards 16. You know, these are volatile, incredibly volatile plays. I guess
if anybody's out there, I wouldn't mind, again, just polling the audience. I don't have a poll set up or whatever. So if you're on YouTube or if you're on our Zoom, the chat's open. Any ideas on, where I guess crypto sort of heads from here and what could be causing this down? Because it did seem like crypto was starting to decouple a little bit from other things. And that makes sense to me because I'm like, all right, it's heading into the halving. You're getting this like, it's just separating itself from the tech stocks a little bit. But
well,
if you
speaking
guys
of
have any
separating,
guesses as to why we're feeling pressure here, I'd like to know.
well, speaking of, I mean, I think this could just be a case, and I'll give you my 2 cents on this. We have a situation here where Bitcoin is still consolidating pretty tightly up here. I mean, it could easily, go down to the 48s, and that really wouldn't harm it that badly. But it's still, I mean, it's still hanging on to these levels right here. It hasn't given up anything from that Valentine's Day rally right there that pushed it up above 51. I mean, we're still above 51. Yes, it's down from its highs earlier today, but the chart looks fine. I think this is just a case of these Bitcoin miners getting dragged down with a lot of the other stuff, a lot of the
Yeah.
growth through tech stuff. I think it just might be it's caught up in the selling. I mean, I'm not saying you should go out and try to, snipe Mara at the lows here and try to buy it at assuming it's going to go back to 30. or CLSK, assuming that it's going to go right back up toward 19. I don't think that's the move right here. But I mean, things are getting a little sloppy. And that's another
Yeah.
thing that we talked about last week. I mean, like you look at things like, uh, I like to go back to ARC because I feel like this is a good emotional barometer um, for what's happening in growth. And you can see how crazy things have gotten. Look at all the gaps. Look at all the moves above and below 50 right here. It's kind of a war zone uh,
Yeah.
right here, where we had a nice comeback in February, which was kind of unexpected after, these stocks just looked terrible in January. They were just falling off a cliff left and right, while you had the semiconductors and the Mag 7 stuff going higher, tech growth is getting pummeled, snapped back above 50. And then we had all of this crazy action here. We had the CPI drama right here. That's this candle where it gapped down, more than 5% and sort of held there all day, and then shook it off into the later part of the week, and then we're back down again right here. Looks a lot like small caps, actually. Kind of the same idea, where there's a lot of indecision. There's a lot of this dinking and dunking here above and below 200. It just feels like we're kind of sputtering, feels like we're kind of sputtering and running on fumes right here. Looks bullish one day, bearish the next. Huge swings. Look at this. Look at these swings in small caps right here. We had this 3 giant candles right here, and then CPI day down 4%, and then bought it all back, and now we're back down here. It's a little wild out there.
And the way that you think about, so like the Maras, the Clean Sparks, the Riots, different than Bitcoin. Are you thinking of that because you're sort of saying like, it's getting washed out with everything else?
Yeah.
Do you think about that as simply as like the person that's holding those might be holding some of those other tech names? That person gets spooked and they're like, I'm just going to kind of sell a good amount of everything because I'm getting scared now. Is it kind of like that?
Yeah. No, it's absolutely like that. I mean, you have to understand that. Okay, so you have a situation where when stocks start to move lower, you get in what's called a high correlation environment. And you guys know what I mean. When you have those days when the market's down, like yes, let's say the S&P is down like 1.5%, the Nasdaq's down 2. Everything's going to be down, and all these stocks that are kind of grouped together, they're going to be down by kind of the same amount, because when people sell, they just sell. Whereas during a rally, you have your market leaders and stuff that's moving, and then you have the stuff that's kind of consolidating. You have some stuff that's moving lower. It's kind of a low correlation market when stocks are trending up for the most part. You'll have those reversal days. Like back in late October, when the S&P was bottoming out, these are pretty high correlation days. It was the rising tide that lifts all ships. Even the shipwrecks were kind of getting pushed up by this rising tide right here, by this big push higher. But then once things kind of sort out, the winners and losers tend to separate, right? And you have the big market leaders that tend to rise while everything else just sort of middles along. And you'll see some rotation here and there. But for the most part, it's a low correlation market. You got your big winners, you got your middlers, you got your losers. That's not the case when things go down. When things go down and things start going down hard and people get spooked, everything kind of gets sold equally amongst their groups, amongst their peers. And so that's exactly how I think about it. Like, I don't think anybody that's panicking because they're losing a lot of money on a semiconductor call right now, and they're trying to raise cash, cares that Bitcoin is stable when CLSK is posting this big red candle.
Yeah.
It's
Yeah,
down.
that makes a lot of sense.
It's so, and again, these correlations, they can separate and then they'll come back together eventually. Like, I'm sure that if Bitcoin were to let's say like later this week were to break out and this was confirmed as more of a bull flag and started moving toward 54, 55K, I'm guessing that those stocks would probably find a bottom and start pushing higher along with it, because people would try to get back on board.
Yeah. And that makes sense. Mara's chart is, Mara has been back and forth like crazy. That's a crazy looking chart. It skyrockets up, skyrockets down, and then right back up. I mean, those kind of moves only probably happen on those emotional swings. Like, just sell it with everything else. And then it's like, everyone's like, wait a second, but Bitcoin is actually looking pretty good. All right. Everyone runs in and buys it again.
Right. That's why, I mean, like, I don't consider these plays, whether you're, bullish or or crypto or whatever, I don't see this as like a really viable like buy and hold type of stock because they'll just drive you insane. You have a situation where we had the big ramp into mid-November where it went from $10 to $30 in a matter of a few weeks. And then obviously that's too far too fast. I mean, that's just common sense. You have these big runaway gaps in the stock. And so it corrects. Yes, there is some rallying amongst the correction right there. But at the same time, moves like this from 14 to 30, where there's no downside, it's just chase, 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 chase all the way up right there, culminating in a big 15% blow off top, above $30 at the end of December right there. Those moves do not correct sideways. No one's going to say like, oh, I'm just going to sit back here and wait, and then the market's just going to mark time up here and you're going to get a nice tight consolidation. There's always going to be some give back. There's always going to be some panic off of big moves like that, and that's exactly what you saw. Even though it did look like it was setting up pretty decently here toward the beginning of January, it fell off a cliff again and had to reset all the way down to the bottom. So let's imagine that we were, a buy and hold type or a growth trader, whatever you want to call them. And they said, all right, I'm going to buy this thing and hang on to it for a few months at 15. I think it's a good deal. They're in a situation where they buy it at 15, high 15s right here. They ride it all the way up. They feel great. They feel not so good here. They get a little bit of hope when it's back above 25, and then right back down to start. And then you have people that are, they're going to say, no thanks. I'm getting out of here while the getting's good. I'm not going to let this go negative. So they sell it here. And then what happens? Maybe they end up chasing it higher. Maybe they end up buying it back at 24. And now it's doing the same thing.
What about I just saw a question come in, and these are two other Bitcoin names. So again, this is all for the group, but you've got the miners that we've talked about, Riot, CleanSpark. What about Coin or MSTR? I think MicroStrategy.
Yeah. Well,
Either of those look different.
MSTR does look a little bit different. This MicroStrategy just kind of trades like a Bitcoin holding company, for the most part.
Yeah.
So I mean, if you're looking, it kind of trades like a Bitcoin ETF, I would say. Before there was such a thing. Yes, it's down the past few days right here. Again, it might be getting sucked into a little bit of the foul mood of the growth stocks and that sort of thing that's been happening since Friday. It is going to look different. It's not the same type of trading vehicle as like a miner. And then you go to Coin. I think Coin's a totally different animal. The business side is a little bit different. I think there's got to be some value here. And I think people were talking a lot about that. I think that was kind of the narrative change. Look, the more we zoom out, the more insignificant this seems. But I mean, Coin got absolutely hammered. This was kind of the growth turning point. Where you had the false breakouts in semiconductors in late 2021 and everything started falling apart the Thanksgiving weekend there, and then rolled over into the bear market of 2022. You can see how Coin went from 360 to $30. That's quite the drop. So it's been building, and a lot of new buyers were coming in during Q4. It posted an amazing rally. It was one of those stocks that was really tough to buy. In the technical world, we like to say like the best breakouts are the hardest to buy because the train doesn't wait at the station for you. They're up like 5-6%, and then they're up 5-6% the next day, and you're like, I'll wait until it settles down to buy it, and it never does. It just leaves you standing there looking like an idiot. That's kind of what Coin did back in November. But you can see here, I think we were talking about it. We must have been talking about it back here at some point, and drawing this line, talking about like that's probably where it needs to retest because that was where it consolidated a little bit. I don't really remember the context, but I'm guessing that's what we were talking about there when we drew that. And then look at knife through that, and now it's coming back up here, and we're kind of seeing a little bit of double toppy action where it was unable to get over the high 180s and hold, and now we have a reversal day on our hands. But again, people were piling back into this thing and chasing it again. It just felt like things were getting too hot, because we already had the Eiffel Tower type of breakdown reset all the way back down here toward 114, which was the swing highs from summer of 23, and then just more chasing. Coin Coin, I think, looks healthier, looks a little bit better as a company right now. And if we do have the crypto speculators returning, which it does feel like everything's sort of building in crypto again this year, I think Coin will do okay. But as for right now, I think that like it's going to be one of those situations where Coin is going to have trouble moving higher in this environment. And maybe it decouples a little bit from Bitcoin, maybe it doesn't. But at the same time, I think it's a little bit, it's a different animal from the miners. I think the miners are just pure raw emotion. Like, I don't even think the earnings matter that much for your Maras and your Clean Sparks. What really matters is like, are we in like a Bitcoin super momentum phase? You know,
Yeah.
if we are on the upside, then it's ripping higher. And if we're not, and Bitcoin's just sort of hanging out, people sell those stocks and they move on to something else because all they want is the action. You know, it's more the crypto casino than anything else.
Yeah. And it's like I say this a lot, but again, we've got over 300 people on the Zoom call right now. And if you take one of these things away, the thing that Gunnar does really well, better than anyone that I know that I've ever published or worked with, I've been doing this for 2 decades, and he does this in the trading desk, is the way, and he does it with his personal portfolio, but the way he allocates allows you to not get caught up in all this emotion of all these charts that we're saying, oh man, here, this happened. And if you would have bought here, you kind of got screwed and then it's over here. If you're allocating where you can only lose 1% or 2 per trade, you're not getting caught up into these things where you have to throw all the other trades out and getting sort of tugged around by the market. You allow yourself the ability for some like rational, well thought out, non-emotional trades, especially when some of these things pull back. Like if we're actually seeing something constructive show up in Bitcoin, you know, being able to buy those stocks once they pull back, that's really what, you know, buying when there's blood in the street. That's really what it is. It's the idea of having dry powder, which you only have if you know how to manage your money and allocate properly. And then having dry powder and a stable idea and system. And Gunnar, you do that really well. So we're at the halfway point in the call, but it's worth saying like that's the real value of what you're doing. It's not coming out here and just saying like YOLO, we're going to pick this stock and oh, it's got earnings. We'll cross our fingers and maybe we triple our money. The key is repeatability, and you do a really good job at that. And it's all the way that you're looking at the markets and you're seeing through the stuff. What else? What else do you see? You want to talk growth stuff? You want to talk energy? You got any other tickers you like?
Yeah, I mean, I think we should rip through some of the growth names because I think we need to be on the lookout for reversals right here in this market. And again, like you were saying, like it's all part of the strategy. It's not just honing in on these individual stocks and saying like, oh, this thing's really moving up right here. That's great. I mean, that's all good and well, but if we're putting our trades into context of what's happening in the market, we're going to have a much easier time because we're not going to be pushing against the tide. You know, we don't want to be like grabbing stocks at the lows here, assuming that we're going to get a bounce. Nobody knows what's going to happen next, but all the signs, you know, all our indicators are pointing to we're going to enter a more corrective phase in the market. So we have to respect that. And only, you know, if we're going to be on the long side, only be buying stuff that's really showing that it's outperforming, not trying to grab stuff at the lows here, hoping for a bounce. That's not a good strategy in this market. It's a great strategy if you're buying stuff on the bounce and we're in a nice steady uptrend. But right now, it's really not the time to be doing that. Now's the time to be going through your list of stuff that maybe was working last week that's starting to roll over and start thinking about like where the downside's going to be. If you remember, Matt, last week we were talking about like, okay, what's working in the market right now? What still looks good as a long? That's the list I want to go back to now and start saying, okay, are any of these breakouts holding, or does it look like everything's going to reverse and maybe give us some momentum to the downside? So if we look at things like you know, this is a stock right here. And again, earnings are in the way, so I don't really think this is necessarily like a viable short-term trade, but I'm looking at stocks like this that we're pushing higher, and this is a growth name that really didn't roll over in early 2024. Looking at this right now, this is still holding up pretty well. Now, I didn't look at these before the call. This is just stuff that's on my list. So I'm looking to see if there's anything that's rolling over and posting any big red candles today and looks like it's going to test any type of those lower levels. This one looks pretty decent. The only thing I don't like about it is the fact that earnings are coming up next Tuesday. And so I probably want to steer clear of this, but this one is holding up really well. So that's kind of a promising sign right there. Let's look at another one. This is another one of those stocks we were looking at. Earnings got in the way again with this one. Look at this earnings reaction right here. Up 17%. following earnings late last week. And then today, down 8, filling that gap, looking kind of ugly right here. This was one of those stocks that we were talking about where we were thinking, okay, maybe this downtrend here, it was trying to fight its way out of that. It did post the big gap higher, but now we're down here in no man's land. Kind of a no touch for me right now because I want to see how this resolves. We're kind of in the middle of nowhere. There's no levels really to play off of. You maybe could argue that it could get down here to $80 and bounce, but I'd have to see that first. You never want to guess when you're kind of in the middle with a stock like this, especially one that's coming off of kind of this sideways to downtrend. The further we go back, the more we see it's kind of trying to build this base right here. And yeah, there was the positive earnings reaction, but that's really not enough to get me like super bulled up on a name like this without it setting back up again. What I am concerned about is the fact that it's giving back so much of this move. Yeah, 17% was a big gain, but it gapped lower, it gapped below its Friday range this morning and is pushing lower down toward its lows. I feel like this is going to be one of those wait and sees, to see where it can stabilize, where it can move out of this. You never want to buy a big red candle like this. You always want to wait for the bounce. People are always trying to snipe at the lows and say like, oh, if I can just buy it here, then maybe it'll turn up. Because what happens is we forget that we already know what's going to happen. We go back and we look at the charts here and we say like, ooh, if only I'd bought right here on the 17th at this candle, that would have been a good entry point. We didn't know it at the time. At the time, that was just like, you're still sitting down there at the lows. That could be anything. It's barely eating into the candlestick from the day before. So in real time, that would not have changed your opinion about the stock. It's only because you're looking at it because you know the result where you're thinking that that would have been a good buy point. So always try to put yourself back into the frame of mind that you would have been in real time looking at these, because anybody can go back and Monday morning quarterback these plays. If I ever have a time machine trader product, I'll let you know, and we can start doing some of that and go back in time and buying those points. But as the technology is right now, I can't do it. I don't know. I can only play with the information that I have right here. So this one, that's a no touch for me right here. What about DKNG? That's one we were talking about as a potential long. Aha. Look at this right here.
Oh,
A strong stock that's getting torn down today. I don't like the looks of that at all. I don't like how we had a nice move off of earnings right there. It looked like it was going to move lower off of earnings and instead pushed higher and then kind of faded a little bit from those highs. You did have people buying what was considered negative earnings news on Friday. I consider that a big positive. However, look at this candle. That's ugly stuff. Gapped down a little bit, and then it's just been pushing lower. It's a little bit off its lows right now, but this one looks like it might have to reset, and maybe this is not going to be a buy again until it comes down here to around 38. That's my best guess on something like this. Just getting too hot and just sort of succumbing to whatever's going on in the markets right now. And again, no reason to get overly bearish on a stock like this. This is just giving us really good information right here. Yeah, we could maybe try to play some downside in it. There might be some better options out there for some downside action, something that would give us a bigger whoosh lower. But I think that if we're in a weaker period for stocks, and if all this stuff starts to play out like we think it's going to, then it would be perfectly healthy for DKNG to drop from 44 down to 38, maybe even a little bit lower. Maybe 36 here, maybe fill this gap, and then start looking for a bounce to extend this trend higher. This is a stronger stock. If you want to really put it in the newsy context, which I don't like to do usually, I like to just think about price because the news can be misleading. But you could say that okay, everybody kind of got bowled up on DraftKings, Super Bowl, biggest betting day of the year, big numbers come in. I'm sure that you could go and dig up an article from the past couple of weeks about how more money was bet on the Super Bowl this year than ever have been before. That's just a guess. But with all this gambling being legalized everywhere and everybody on their phones gambling, that wouldn't surprise me that was the narrative. What a perfect spot for this to kind of flame out a little bit and to reset down here in the 38s and then attempt to bounce and extend this trend. So again, putting things into our market roadmap, looking at DKNG, I would say it probably has a little bit more downside to go from here. Let's see. What else were we looking at that could potentially really move? I think we were looking at some of the arcs. We had a list of good arcs that we're setting up. Was Twilio one of them? Let's see.
can't
Oh,
remember.
that's
No, that was a bad one.
right.
That was a bad one.
No, I think we were talking about it back in here though, and then we were saying, well, we got earnings coming up, and we see what
That's
happens.
why, look, the picture's worth a thousand bucks right here. That's why Gunner does not mess with earnings because that chart looked fairly positive before the old earnings hammer time came.
Yeah, it looked pretty decent. And again, earnings, especially when it comes to
You
like
could have bought
volatile
any,
growth.
you could have done any strategy upside. You were not
Yeah.
making money.
And then look, I mean, like this is even getting oversold probably right here. I mean, this thing is just going straight down the tubes. It was down 15% on earnings, and then on Friday it extended lower by 4. No buyers are really stepping in yet. So yeah, I mean, this is contributing to the ARC weakness that we're seeing, the growth stock weakness. It makes sense. We were talking about CRISPR too, right? Um, Crispy. This doesn't look half bad. But uh-oh, what do we have here?
Huh.
We got earnings today. Yikes. All right. Hold
We
on
should
here.
just call those, it's like spin the wheel.
Yeah,
It's like you can be here on spin the wheel day, but you're there on spin the wheel day. So if you like
yeah.
that, you can, but
I mean, it had a great run up. I mean, like if you were kind of playing this breakout right here, and again, this is Monday morning quarterback, and this doesn't count. This is time machine trader nonsense. But if you were playing this breakout right here on the 8th, and you were thinking, okay, maybe I'll get a little pre-earnings run up, people trying to get in ahead of earnings, you probably did pretty good. Even if you sold right here, you'd be doing pretty good. But I would get the heck out of the way just because I mean, I don't know if you guys have been looking at some of these stocks. These earnings reactions have been nuts. We've been talking about a lot of this at the trading desk about how it feels like anything on the growthier side, you're either up 25% or down 25% falling earnings. There's not a lot of in between. There's nobody flatlining after okay earnings. It feels like everybody's loaded up on one way or the other, and we're getting a lot of big moves uh, right there. And so I don't like to play them just because it's a binary event. Um, and even if you have a nice looking chart on your hands, that can reverse in a hurry. We saw what happened with TTD. I think Path was another one that was looking really good and extending. Yeah, see, this is a perfect example of what we were talking about. And again, I haven't looked at these yet today, which is kind of nice because we're talking about it in real time. This is a false breakout that can really kill you in a market like this. I was kind of kicking myself because this was one of those trades that I was looking at when we were looking at some other plays potentially on the trading desk, and I was looking at it firming up here and attempting to close over these swing highs from January earlier this month, and then it kind of pulled back a little bit, and it was like, no, I don't really want to chase something like this. It was a little too crazy, and then all of a sudden, boop, you get the gap higher, and it's up 8%, and it's out of pocket, and it's not really a good play at that point. Well, it extended the next day, and now we're right back down into the range again. So from fast moves, from false moves come fast moves in the opposite direction, because what happens is you get everybody trapped up here above this line. You get people chasing this breakout because they're finally like, okay, blow the whistle, we're all clear. Let's roll. We're going to run this thing to $30, and it doesn't work out. And they end up, yeah, another Eiffel Tower, says Miles. So that's the situation right here. We had a gap higher right here, which was looking promising. It needed to blow off some steam. It's set back up again. And now I think it's just, again, I think this is just a symptom, not necessarily of this stock. It's just a symptom of the overall market, just getting a little bit too stretched. People getting a little bit too bowled up into a seasonally weak period right here. And now it's time to twist the screws a little bit and cause a little bit of pain. And that's what's happening here because, again, put yourself in the shoes of someone who bought this breakout right here. You're probably looking at this gap lower and you're like, that stings. But, things are still okay. I'm going to see what happens here. And then it rallies the next day. You feel a little bit better because it's crawling back up. It opens higher, opens above 26. And you're like, okay, maybe things are going to be all right. And then Friday gets you and you say, well, I'll wait until Tuesday to see what happens. And now it's falling apart. So you can see how you can easily get trapped in false moves like this. This is the type of market where you're going to see these. This is the exact type of market where I'm not saying I would expect every single breakout to do this, but more often than not, you're going to have a situation where these type of moves aren't extending higher. You're not going to see this from this line to this line in a market like this. And yeah, Eiffel Towers, just because I'm seeing some chatter about that. That's just a fun thing, we like to call moves like this, where you get a nice straight up, and this isn't a perfect one, but you get these you get these nice big, that's an Eiffel Tower, nice big straight up move right there, and it gives it all back. And that happens on some of these parabolic moves right here again, and it all comes back to the principle of parabolic moves don't correct sideways. They don't give you those tight consolidations that you like during a nice steady uptrend. So that's what happens. And people get trapped because they end up buying near the top, and those are the folks that get trapped, and they ended up selling aggressively, that's what gives you that big snowball move to the downside right there. So, as long
Yeah.
as we're cognizant of that, we're going to get stuck in trades sometimes. We're going to lose on some positions. That's part of the deal. But if you understand what kind of market you're in, and you're willing to, take some flyers and, bet on some short-term downside, in February into March and things like that, then I think you can still, pile up some pretty respectable gains along the way right there, while still keeping some stuff on your long watch list too. And yeah, like Robert says, gravity beats euphoria every time. Gravity can get you, man. Like, you can have a really nice looking trade setting up, and then, if the overall market starts falling apart, it's going to slow it down. People aren't going to be as excited to buy it because they're going to be just a little bit anxious about what's happening in the broad market. Now, that being said, where can we look for some stuff potentially on the long side? I think that's another thing to be thinking about. We don't have to be constantly thinking about like downside, downside, downside in a market like this. It could just be messy. So I was looking at energy. We talked a little bit about energy, and energy has been messy, in fairness, but XLE has caught down here, and it was looking terrible. But it caught down here at 80, and it's pushing now toward 85. It's not up today, but it does look a little bit more constructive than some of these other groups. And if we look at crude might finally be setting up for something here. I mean, like, I feel like I beat the dead horse here, but I'll repeat it again. Feels like there's a floor in WTI somewhere in the high 60s. Someone's always coming in and buying right there. And so now that we've bounced right there, albeit a sloppy one, I'm kind of looking at like the high 70s. I think if WTI can poke its head above 80, then people are going to start to notice. And maybe there's going to be some long side energy plays out there that work into the second quarter. So that might be an area where we can look to kind of pivot to if we have a market where, let's say, tech growth, semiconductors, Mag 7s start to roll over, consolidate, move lower. Maybe we're in a situation where the money moves from those stocks and then starts picking away at some of these energy names. That's a possibility. So I'm keeping this on watch. And again, I'm not going to get super excited about it until I see a little bit of confirmation of oil poking its head up toward 80, of XLE firming up, some individual plays right there. I think this could be an area where we could see some interesting stuff on the long side. And again, it's interesting because I don't think there's a lot of eyeballs on this space right now. So I think it gets some momentum if it does start moving higher, because it would be unexpected. But also, we know where the floor is. We're not reaching up and buying those big gaps higher. Instead, we're buying a bounce off these lows, and we know when we're wrong. And if we have a situation where it pokes its head up above 80 and then just immediately tanks, we can just get out, and no harm, no foul. Because again, we're not playing up here in the stratosphere, which is kind of nice.
Yeah.
Another one, Matt, what about China? China has looked terrible for a long time. This is China large caps, FXI. It's an ETF, trying its best to carve out some sort of bottom right here in 2024. Just to give you an idea of how terrible this looks, I'm going to zoom out and show you how far below it is from the COVID crash lows. This is the COVID crash. It doesn't look like anything on this chart. Right here. This is January 2020 to March 2020. Back here on the left-hand side of this chart, right here, we are nowhere even near sniffing those lows. We're so far deep in the gutter on China large caps. Yes, they rallied on the pandemic rally into 2021, but flamed out there and have gone straight down ever since. We're still going straight down. These are the October, November 22 lows. Attempted to rally with the rest of the world here in January 23, and then failed miserably and are down here. I mean, this is looking historically terrible. Um, if it can catch and run higher here and we see like a decent bounce, this could possibly be a good reversal day from the 6th. If we can get some confirmation and continue to build from here, maybe there's some interesting momentum just as a snapback, you know. And again, this isn't like declaring that like, hey, everything's great in China. It's all better. This is the low, this is the bottom. We don't need to say that. We can just say that, hey, you know, historically ugly chart, plumbing the lows here, potential reversal candle, big volume coming in. Could this give us even a move back here to, the November highs would be huge. So this could be a viable trade right here, something worth watching. I don't know if anybody else around our universe has put a trade on like this, but this is something interesting that I have an eye on moving forward here.
Yeah.
And we
And
have
that's a good example of what I was saying before, because I don't know we were talking about in the green room, but I don't know anything about FXI or China other than all of my like the narrative that's fed to me. And I'm like, I would want to stay away from China with like a 10-foot pole, but that's my emotion talking.
right.
So
Yeah.
again, this is it's constructive in that sense because there's nothing in my body that would want to buy China. But that's
Yeah.
probably what's happening to 80% of investors right now, and they're all out.
Well,
So
that's
there's
it. And I
we're
and I
getting rid of the people that can even sell.
and I feel the same way, which kind of pushes me toward like maybe there's something here because there's nothing
Yeah.
good happening in China right now.
Yeah.
I mean, like it's really
And if Trump gets elected, it's like that everyone knows, like it's like there's so many bad narratives for China
right.
that
Yeah. And
maybe
that
they're
might
all
be
baked in.
and that might be absolutely true. And those narratives might be true, and we might just be talking different time frames. And that's why trading is so interesting because you have a situation where I'll have people talk to me and they'll be like, "Oh, I hate this because of this reason." And I'm like, "Well, yeah, but we're talking about I'm bullish on it in a much shorter term time frame than whatever you're talking about would play out." If I'm playing price action and there's a very loud bearish narrative, I mean that can help my case and help squeeze something higher, at least in the short term. And I can still profit off of something like that. Everything you told me about, on the bearish side could very well be true in 18, 24, 36 months, absolutely. But for right now, you know, we can kind of use that to our advantage and maybe it can help propel, a really ugly looking chart higher. And so like we always want to keep that kind of in the back of our head
Yeah.
right there. And sometimes, on the other hand, sometimes we're just dead wrong. I mean, remember Brick Mania back in 2003, 2004, and like people couldn't get enough of Brazil and China, and all those stocks were just going straight up, and everybody was talking about how the Chinese economy was just going to destroy the U.S.'s economy, and 20 years from now we're all going to be speaking Chinese and all doing business over there. Well, it's 20 years later, and we're nowhere near those highs. So those narratives completely fell apart. And so we just have to be aware of like, things that can unfold a lot differently than we expect. And as long as we respect that, and we're just looking at price and we're trying to play the short-term action right there, I think we can come out on top.
You were about to get me to do a USA chant, but I'm not going to do it right now. That said, this is a good segue. Chris wrote earlier in the chat, was wondering about the dollar. Do you want to pull up the dollar? He was
Yeah.
asking what it looks like in the next month or so, but let's just talk broad strokes. Pull up the dollar chart and see, like, is there
Well, just to set it up,
any
we were talking about, dollar weakness dollar weakness and the pressure coming off of yields was one of the main sources of fuel for the melt up rally in Q4. And that's really obvious on the chart. Here's the line right here. You see the downtrend. It's plain as day. The dollar failed to top its early October highs and then fell off a cliff in early November. The rest is history. That has changed so far this year. We were talking about that when the dollar first got above 103 right here back in the middle of January. And we were saying, it looks a little bit different for the dollar right now. The dollar looks like it has some strength that could weigh on stocks. And that's certainly what has happened for the most part. That's certainly, I mean, obviously, like there's been some stocks that have totally ignored this, but for the most part, this has changed the situation here. It is looking like it's pulling back here, and it's been pulling back from this move, pushing up toward 105 into this week. However, the market is kind of ignoring that right now at the moment. I think we're still kind of elevated and it's still consolidating. I don't think this move is necessarily over just yet. I don't think we can stick a fork in the dollar and say like, oh, it's not going to go up. Um, it's not going to go up any more than this or whatever. I still think that the dollar could push all the way up back here if we still continue to see weakness. If we start to see, I don't know, what if we get more like bearish economic data? That could push the dollar up. So I'm not ready to declare this little uptrend that started on the last week of December right here dead. I still think that the dollar could maintain some strength here. I want to keep an eye on it. It does, like I said, it is pulling back today. That's a positive sign for like precious metals and risk assets. However, like I think we're on a different roadmap right now, and people are more concerned about
Mhm.
some of the overbought conditions in the overall market, and we're kind of decoupling from that relationship in the
Yeah.
short term. But yeah, I think the dollar could still be strong, for the time being, and that has certainly affected precious metals. We talked about gold kind of retreating there, and you can see how the inverse relationship is there. It's been building since the dollar's been pulling back, and gold kind of snuck below 2,000 there for a little bit. Um, I said back in December that we were getting all bulled up on gold right here and thinking we were going to continue to build, and I was thinking 2,600 ish by the start of Q3 this year. And look, here we are, still stuck. This thing has been stuck in neutral. And you know, maybe we need to push that time frame back a little bit. I still think gold is a viable trade on the long side if and when it gets going again. It's not breaking down, but it's not moving right now. And I think what we need to see um, before we start getting really bulled up on gold in the short term is we need to see silver start to outperform again. That's not the case. We need to see silver start spiking. It's not spiking right now. And that's usually the hint that like things are starting to move in our favor in precious metals when silver starts moving, leading gold. We need to see silver moving. We need to see the miners start to move. This could be an interesting spot right here. Thinking back to how we were talking about crude, uh, we have buyers stepping in here at the lows, and I've seen some big name fund managers talk about buying some of the miners here and that sort of thing. I need to see a little bit more. I don't feel like going bottom fishing on the miners right here. Yes, that is a decent looking double bottom, and you could test your luck here on maybe a minor trade and then have a stop somewhere below here in the mid 25s. I'd like to see a little bit more momentum. I'd like to see it break out of this downtrend right here and start moving. But until we see the miners and until we see silver really start to perk up, then I really don't think we're going to see gold get moving again because there's just not going to be the hot money flowing into this trade right then. I thought back in December that we would see a lot more interest in precious metals after having the monthly close above 2,000, which I thought was a big deal. No one else seems to think that just yet. So this could be a case of just needing to be patient. It could be a case of we need to flatline for a little bit. I don't know. We're gonna have to wait and see. But from a short-term trading perspective, I don't see any reason to be involved just yet. That would be dead
Yeah.
money as far as I'm concerned. And I want my trades to start working for me, in a reasonable amount of time instead of sitting around waiting. And so like, just from a more short-term minded person, I'd say it's hurry up and wait.
I'll give you another kudos. During our 7 prediction summit, I think we did a lightning round that was in December with all the editors at Paradigm. And I think we went pretty heavy duty. We were saying, what do you want to buy in 2024, Bitcoin or gold? You only have two choices. And I know, Gunnar, as the trader, you came in and you're like, I got to go Bitcoin. So right now, you're
Yeah.
currently up. You're currently up on that bet compared to everyone else. And it's true. I mean, again, this is all fundamentally speaking, but like, I think that's where like everyone's wondering, why is gold not going up? Well, when you start splitting asset classes, you're getting all those new, 20 years ago, the people that are buying crypto might have become gold bugs. Byron King talked about this. He went to a gold mining conference and he's like, why are all these young kids here? And he started talking to them. He found out they were like crypto investors and they were at a gold mining conference. So it's like, but primarily they're crypto people. So it's gonna take a little bit of time, and you're kind of splitting traffic at that point.
Yeah.
Like to get a full-on retail mania on gold, you're probably going to have a stronger full-on retail mania on Bitcoin first.
Yeah,
So
I think you're right. I think that's just a case of evolving markets, you know. I mean, and you could think that like, yeah, I mean, I think that there's a lot of like-minded people involved in Bitcoin and precious metals, that there just might be like a generation gap there, like you said. I mean, I
did
do.
Porcher, did he say that first or second? I don't know. I wasn't looking at the comments when I was talking.
I think Porcher was talking about it first, and you were
Oh, I
right
don't
in
like
line with
that.
it.
I don't
Yeah,
like that. Rewind the tape.
yeah,
Oh,
and
he said he was first too.
he
Damn
was.
it.
I think he was first. Yeah. So
I'm yeah, I'm
you're stealing
I'm
all
not
our
happy about
subscribers' good
this. I'm
ideas.
not happy about
Um,
this.
No, but I mean, I think there is a lot of overlap. You know, there's a lot of libertarian thinking, you know, that goes along with a gold buyer or a crypto buyer, and so I think it might be splitting the market. I think that's entirely plausible. How much that matters, I don't know. But yeah, you're from the old generation, but at the same time, you know, I think there are older people that are on board with crypto as well. Maybe just not as many as we think. You know, because in our world, we're all involved in this stuff, and we're, you know, our noses are very close to the monitor.
Yeah.
But yeah, I think there's some overlap. I think it's the same thing with maybe some of the more speculative growth stock trading. I think that like a lot of that market has moved into crypto as well. I mean, like all the smaller cryptos that move, and because people want action, and anybody who's a shorter term trader, I mean, can tell you that like that's where the momentum is. That's where you want to be. That's why me and James are the only people on the call that were like, gonna have to go crypto with this, because that's where the momentum is. If gold is going to be going from 2,100, where well, it was near 2,000 at the time, I guess, to
Yeah.
2,600, that's a major move, but that's not going to produce the same type of gains as Bitcoin doubling in a few months, which I mean has happened before and is much more probable. It just moves faster, and you know we've seen what the crypto miners can do. Um, so you know, you get a name like CleanSpark, and you can really clean up with, you know, plays on the upside and the downside, and you get these bigger ranges. And for a short-term trader, that's great. You know, if you can handle it and you can catch that tiger by the tail, man. I mean, like those are some great moves that can be made. And then, you know, meanwhile, the gold miners here are trying to find a floor and everything like that. I'm not dissing them. I'm just saying that's the state of the market right now, and you want to go where the hot money is.
Yep. Awesome. Well, I think we got a good rundown of a lot of different tickers, a lot of different charts, a lot of which the way that you're feeling about the market too. And I, again, if I'll restate it for everyone, it does seem like, Gunnar, and tell me if I'm wrong, seems like you're a little bit hesitant in this market because you're layering all these things on. And you're starting to see some turnover in a decent amount of the charts and in the index, looking like it's taking a little breather. So this might be a time if you're layering all that stuff on like Gunnar is, just to take your time with trades, maybe limit the amount of trades you're doing and make sure you really like the setup that you've got.
Yeah, and it's also a great time, you know, if you're not necessarily like in the trenches and trading every single week. This is a great time to take a step back and start looking at the stuff that you wished you bought in November and saying, okay, where would I want to buy this if the market continues to correct? This is a great time to, you know, to really start planning out like, you know, where you want to position your portfolio heading into like the end of this year, because I think we're going to have some time. You know, if the market is as seasonal as it was last year, I mean, last year we kind of played, we kind of ran neck and neck with where seasonality should be in a pre-election year. If that continues to be the case this year and we kind of follow that same blueprint, you know, it's not going to be exact, but like if we follow that same blueprint, the gains in the market this year, we've already seen some so far. We're going to give some of that back, and we're going to have a flattish to correctional period, and then the rest of the game is going to be very backloaded into the fourth quarter. So in the meantime, you can start parsing out like what stuff do I want to get into while it's not just ratcheting higher every single day. You know, how do I want to rebalance my portfolio? You know, all that stuff that everybody was racing to do in January. You can take your time and really methodically go through and figure out what you want to buy and not have to worry about chasing, you know, into the summer. And I think that's a great thing. You know, go against the herd right there, and you know, don't panic when they panic, and figure out what you want to buy and hold. This is a great opportunity to start looking. Maybe not pull the trigger just yet, but start looking and see what you like out there.
Yep. All right, everyone. Thanks for tuning in on another Top Trades. We'll be back next Tuesday at 11 a.m. And again, just programming note, I think Roy asked it in the Q&A. This replay will be coming out. We'll send it to Top Trades. If you're on YouTube, I think YouTube shocking. YouTube is a little quicker than us at reposting the replay. So you might be able to just go onto YouTube at the Paradigm Profits channel. You can go ahead, watch it there. If you're on YouTube, give us a comment, give us a like, subscribe to us. We like seeing you there. And otherwise, Gunnar, thanks for the time. Thanks for everyone tuning in. We appreciate all the comments and all the back and forth. And we'll see